to 5 Minutes, 5 Questions of Keith Miller. And today we're going to dive into the mortgage world with Jason Farrell from Lennar Mortgage, who's going to give us 5 answers in 5 minutes. Let's go.
Let's do it.
All right, before we get started, just give us a little bit of your background in the mortgage business and we'll go from there.
I've been doing mortgages for over 25 years, closed thousands of loans, specializing in FHA, VA, USDA, as well as conventional products. So I've been doing it a long time.
Absolutely. So here's my first question. All right, what's the biggest mistake buyers make when applying for a mortgage?
Well, that's a good question. Skipping the pre-qualification or pre-approval process is one of the biggest things, especially when you're looking at a house and wanting to get into a house that you fall in love with, that you walked, and the next thing you know, you don't have your finances in order to make an offer. So having the pre-approval or pre-qualification process completed ahead of time, so you don't lose your opportunity. Next is don't make any big financial changes. A lot of people, go and buy a car or change the jobs in the middle of a mortgage or just before they apply, and that becomes a little bit of a hurdle. So those would be the biggest concerns.
That's a really good point, especially what we found is some people decide even after the pre-approval that it's okay to go buy something and they can't.
Yeah, no.
All right, next question. How does a buyer's credit score affect their loan options?
Okay, so depending on the credit score, it'll of course affect your loan approval. It'll affect the loan terms and the different products that are available. So not all products are available depending on your credit score. So if you have a lower credit, you limit yourself into the products we're actually able to give you an opportunity to get into. The higher credit scores are getting you better opportunities and more options to choose from.
Okay. Question number 3, what are current interest rate trends and what should buyers expect?
Okay. So rates right now have been steady to slightly lower the past 30 days, but with the Lennar incentives that we do have available right now, we can offer up to 2% lower than market rate. That is buying a brand new construction Lennar home, and that also helps buyers. There's no need to wait. They can, for mortgage rates to go down. With that 2% reduction in rate will give better opportunities to someone to buy now compared to waiting.
Right. For instance, on a $300,000 mortgage, they're saving hundreds of dollars.
Hundreds of dollars a month. Yes.
Okay. Next question. Can you explain what a rate buy down is and when does it make sense? Because I'm sure a lot of our viewers don't really understand how that works.
So a rate buy down or paying points to buy down the rate is not always a good idea with all situations. So it all depends on how long you want to keep the home. So if you're a type of person that thinks they're going to keep the home in a long period of time, yes, a rate buy down might be the better way to go, because you always got to weigh out the cost. So there's a cost to buy down the rate, and you want to make sure the savings outweigh the investment. So whether it's a temporary buy down, meaning it only good for 1 or 2 years, or a 30-year permanent buy down, it all comes related with a cost, and we can go into the dollar and cents of it once someone applies to see what the best option is to them. Not to mention the temporary buy down also helps consumers. Let's say they were expecting a bonus or they're expecting a raise, and they want a low mortgage payment now, but in 3 years or 2 years, they'll be able to make the full mortgage payment, and then they'll be better situated with the new job, would say position or increase of income.
Okay, awesome. Last question. What's one tip you wish every buyer knew before they got pre-approved?
That's a good one. So start saving early for your down payment is always a good place to start. If you're concerned about your credit score, always you start to pull your credit or look at your Credit Karma, and most of the online options to you, they give you a idea of where your credit is, but it's not a mortgage credit report.
Is that typically inflated a little bit?
It could go either direction. It could be inflated. In some cases, I've seen it go higher, and in some cases, I've seen it go lower.
Okay.
And also to start gathering documents for stress-free. You don't want to be in the middle of a mortgage application and running around, I can't get this W-2 or I can't get a pay stub or bank statements. Kind of have them ready and know how to get them earlier in the stage will make it so much easier and less stressful.
Beautiful. All right. Thanks for joining us. If you found this helpful, drop a comment, give us a like, and share with someone who's buying or selling real estate. See you on the next episode.